Harris Financial Group's Jamie Cox is with us, New Century Advisors economist and creator of the Sahm Rule, Claudia Sahm, TD Cowen's Washington strategist, Chris Krueger, and the Wall Street Journal's Greg Ip. And it's really great to have you guys all here. Very, very much appreciate it. And it's going to be, there's a lot happening. There's maybe a papal decision at the same time, the swearing in of the ambassador to China, Chris. So where is your attention most directed?
I mean, I think it's still with tariffs, right? There are four big sections of tariffs we're watching. You still have the Canada-Mexico tariffs, USMCA. No real clarity on that following the meeting with Prime Minister Carney. Then you have the China tariffs. Maybe we'll get something on that this weekend.
Did you think that was a big deal that they're going to be meeting in Switzerland?
I think it was sort of a question of when, not if. At least we know part of that now. And we'll see as we go forward. But, I mean, 145% baseline just wasn't sustainable, so we'll see as that unfolds. Number three are the sectoral tariffs, right? Steel, aluminum, autos, pharma, et cetera. And then finally, the reciprocal tariffs. So there's a lot to unpack. That is really where a lot of our clients are asking questions on and just sort of getting those timetables and where could we end up.
Does it overshadow the Fed, Greg? You know, the focus turning towards what happens at the meeting this weekend, or even just some of the data the last few days being strong? Is it almost kind of, you know, they're not going to react to that? They're probably still thinking of the data maybe 2, 3, 4, 5 weeks ago.
You certainly have to care about the tariff news because that establishes the baseline for growth and inflation activity this year. But absolutely, we care a lot about how the Fed responds to that information. It's very, very important. In fact, it was just a few weeks ago that we saw the markets sell off on the perception that in his public remarks, Powell was leaning towards taking a tougher line and worrying more about the inflation consequences than the growth consequences. That's what I'm going to be watching most closely for what comes out of this meeting this afternoon. And I will say that irrespective of anything happening on the tariff front, the inflation news, in my view, should be pointing the Fed in a more dovish direction. We've got a very good CPI, a very good PCE price print for the month of March. The wage number for April, one of the lowest in quite a few years. If you didn't think that tariffs were an issue, you would feel very comfortable with where the inflation picture is going.
Are those too backward looking in the sense that if some of the ISM indices showed really high prices paid and that kind of thing? So is it coming still, some of those price pressures?
Think about the inflation outlook as two chunks, the baseline and the tariffs. And whatever the tariffs are, which were somewhat, a function of whatever Trump feels like tweeting out this morning, the baseline matters, right? The lower the baseline, the more comfortable the Fed can be and not overreacting to the tariff news. And by the same token, being more cognizant of the downside risks to growth.
All right. And so, Claudia, you're on our mock Fed panel. Do we call you the chair of the panel? I mean, we cannot officially make you the chair. Sure. It's just interesting to think about the dynamic where we have now a couple of members, Zervos yesterday, joining those who are calling for a 50 basis point rate cut. But in all seriousness, you don't think they're going to move this meeting. But which way do you think that bias Greg is talking about? Is it more on the inflationary side or growth side? And which way on the inflationary side?
Well, a piece I would add to what Greg said about the baseline being important, another piece of it that is really relevant to the Fed is the fact that inflation has been elevated above the 2% target since 2021. And so it is appropriate for the Fed to be putting a risk on this more persistent inflation, that this is a scenario in which you could imagine it becoming embedded. So, I understand why the Fed is on its wait and see at this moment. And really, a lot of it comes back to these are very large tariffs. These are disruptive levels of tariffs. And so, and not something that we have a lot of precedent with. So they want to see some of this flowing through into the economy before they start adjusting policy. So they don't have to reverse course and say start raising again.